Welcome to the Deep Dive, where we cut through the noise of earnings calls and deliver the insights you need directly to you. Today, we're diving deep into the recent Q2 2025 earnings call for Terna S.p.A., Italy's critical electricity transmission system operator.
Our mission today is, well, pretty clear: to distill the most important nuggets of knowledge from this call, offering you a shortcut to being truly well-informed. We'll be taking you beyond just the raw numbers, exploring management's strategic insights, and revealing what this all means for the broader energy transition landscape.
Yeah, and what's truly intriguing here isn't just Terna's impressive financial growth and, those record investments. It's the market's surprisingly muted reaction right after the call. We're going to explore why that happened and what Terna's quiet revolution means for the future of energy in Europe. So let's unpack this, starting with a snapshot of those results.
Yeah.
Okay, so Terna delivered a genuinely solid set of numbers for the second quarter of 2025. We saw net income, revenue, and EBITDA all achieve an impressive 8% year-over-year growth. That's a strong indicator of consistent performance.
Definitely. And what truly jumps out from these figures is the sheer scale of their capital expenditure, or CapEx. It surged a remarkable 35% in Q2 alone, hitting $757.2 million.
Wow, 35%.
Yeah, and when you look at the first half of the year, their CapEx reached a record high of $1.319 billion. That marks a significant 26.6% increase. This isn't just spending, it's a real acceleration of investment.
Right, but despite this robust performance and that undeniable acceleration in investment, the immediate market reaction was, well, notably subdued. The stock closed essentially flat compared to its pre-call levels, and there wasn't really any unusual spike in trading volume. So if the numbers were strong, what do you make of this apparent disconnect, this kind of muted market response?
It's an interesting puzzle, isn't it? While Terna's management expressed clear confidence and adopted a very, execution-focused language throughout the call, the market's reaction suggests that these strong results and even the aggressive investment plan were largely anticipated. It seems expectations were already pretty much priced in, and there weren't enough major surprises to trigger a significant re-rating of the stock. It implies a certain maturity, perhaps, in the market's understanding of Terna's trajectory.
That's a fascinating point. So beyond those impressive headline figures and the market's cool response, what's truly fueling this accelerated investment? Let's sort of peel back the layers of Terna's strategic direction to understand the underlying forces driving these numbers.
Absolutely. From a financial perspective, the growth in revenues, which reached $1.894 billion, was primarily down to regulated activities.
Right, the core business.
Exactly. This was driven by the expansion of their regulatory asset base, or RAB, and also the early recognition of depreciation related to their 2024 capital expenditures. What's important here is that regulated activities provide a highly predictable revenue stream, underpinned by long-term frameworks. Non-regulated activities also saw an increase, largely due to the performance of their equipment segment, adding a complementary layer.
And that record-breaking CapEx, that $1.319 billion in the first half, that's a serious commitment. What exactly are they pouring money into? What's the strategic imperative behind these particular investments right now?
It's really a multi-pronged approach, all focused on future-proofing Italy's grid and positioning it right at the heart of Europe's energy evolution. They're investing heavily in critical infrastructure. We're talking about projects like the Tyrrhenian Link submarine cable.
That's a big one, yeah.
Which is a massive undertaking connecting Sicily and Campania, significantly boosting power flow. Then there's the Adriatic Link, another vital connection. They're also modernizing their high-voltage grid, specifically for the 2026 Winter Olympics, which, highlights the national importance of their work. And crucially, they're investing in what they call a defense plan, designed to enhance grid stability and voltage control. Think of it as fortifying the grid.
That sounds like a monumental undertaking. So to support such massive investments, how is their debt structured? What does it tell us about their financial discipline?
It's a good question, because large CapEx naturally impacts debt. Net debt did increase slightly to $12 billion by the end of June 2025, up from $11.16 billion at the end of 2024. However, what truly stands out is Terna's incredibly cautious debt management approach. They've built, essentially, a virtual debt fortress.
Okay.
Approximately 88% of their gross debt is at fixed rates, and it has an average duration of about 6 years. This strategically insulates them from rising interest rates, ensuring predictable financing for this multi-billion-euro grid transformation. The cost of debt for the first half was impressively low, around 2.6%, with expectations for the full year to be slightly below 3%. It speaks volumes, really.
So we're seeing strong financial performance, a clear investment strategy. Did management reconfirm their full-year guidance, and how does this fit into their longer-term vision?
Absolutely, they did. Management highlighted their unwavering commitment to the energy transition, to advanced digitalization, and to significantly enhancing grid resilience. They reconfirmed their full year 2025 guidance, projecting revenues around 4.03 billion, EBITDA at 2.70 billion, and net profit at approximately 1.08 billion.
Still aiming high then.
Yes, and their CapEx target for the full year remains ambitious at around 3.4 billion. This isn't a standalone plan either. It's part of their larger 17.7 billion industrial plan stretching out to 2028 and aligns with an even grander 23 billion national development plan by 2034. It's a long-term roadmap, not just quarterly targets.
And what about tangible progress on these strategic projects? Any significant milestones announced that highlight their execution capability?
Definitely. A key strategic initiative discussed was the completion of the cable laying for the Tyrrhenian Link's eastern section connecting Campania and Sicily. That's a huge step.
That is big news.
It is. They also signed a memorandum of understanding with the Greek TSO, that's their transmission system operator, for a new HVDC interconnection, high voltage direct current. This isn't just another cable. It's about creating incredibly efficient, long-distance power highways, basically laying the groundwork for stronger, interconnected Mediterranean energy hubs, which means they can share renewable energy more effectively across borders.
That's very forward-thinking. And on the innovation front, particularly with the rapid advancements in tech like AI, how is Terna leveraging these tools?
They're certainly not standing still. Terna inked a significant partnership with Microsoft. They're going to leverage artificial intelligence, develop next-generation data platforms, and build out hybrid digital infrastructure.
So more than just IT upgrades.
Oh, much more. It's about optimizing grid management, predicting demand, integrating renewables more seamlessly. They also launched the Adriatic Innovation Zone and are actively collaborating with top universities to foster research and advanced training in electricity systems. It's a clear push towards embedding deep tech into their core operations.
Okay, but this raises an important question. With such massive projects and ambitious plans, how exactly is Terna managing to fund all of this? You mentioned no capital increase.
Right, it's a crucial aspect, and they've been quite successful on the funding front. They successfully launched their first 750 million European green bond in July. And what's really telling is that it was oversubscribed by almost 5 times.
Wow, 5 times.
Yeah, it showcases incredibly strong market receptivity and investor confidence in their commitment to green infrastructure. Additionally, they secured 1.5 billion in financing from the European Investment Bank and Intesa Sanpaolo specifically for the Adriatic Link project. Demonstrates real institutional backing.
That kind of funding support signals a lot of confidence. And speaking of confidence, how have credit agencies reacted to their increased investment plans and debt profile?
It's been positive across the board, actually. In a clear sign of confidence, S&P upgraded Terna's long-term rating to A back in April, and Moody's improved their outlook to positive in June. This reflects a solid financial structure and, prudent management, even with the expanded investment plan.
So they think they can handle it.
Pretty much. It tells you these agencies believe Terna can execute its ambitious plans while maintaining a healthy balance sheet.
So no concerns about stretching themselves too thin. What other financial levers do they have at their disposal if needed?
That's precisely what they addressed. Terna discussed their substantial financial flexibility. They noted capacity for additional hybrid instruments up to 4 billion, essentially equity-like debt. They're also factoring in potential public grants. Over 1 billion is already assumed in their current plan, indicating governmental support. They also have the option of CapEx prioritization, meaning they can adjust project timelines if necessary, and the valorization of non-core assets, selling off non-essential bits. And importantly, they explicitly stated they do not see any strong rationale for a capital increase at this time. That reassures the market they can fund these projects without diluting shareholder value.
Shifting gears a bit, let's zoom out for a moment. How do these individual company dynamics fit into the broader energy landscape? What about the macro trend shaping Italy's electricity demand?
It's essential to connect Terna's story to the bigger picture, yeah. National electricity demand for the first half of 2025 remains stable at around 153 terawatt hours. Consistent, but the composition is changing dramatically. Renewables covered about 42% of that demand.
Down to 22%.
And solar production grew by a significant 23% year over year. This just underscores the urgency for Terna to upgrade the grid to handle more intermittent renewable sources. But what's even more interesting, and perhaps a massive future driver, is the surging demand from data
Oh,
centers.
yes, the data centers.
High voltage connection requests from these facilities have reached approximately 50 gigawatts by year end. That's up sharply from 42 gigawatts just back in March.
50 gigawatts. That's huge.
It's staggering. To put that in perspective, 50 gigawatts is roughly equivalent to the peak power demand of a mid-sized European country. Terna isn't just connecting homes anymore, they're connecting the future of the internet, essentially.
That really puts it in context. With all this talk about grid modernization and increasing demand, the question of system stability becomes even more critical. I mean, in light of events like the recent Spanish blackout, how confident is Terna's management about the resilience of the Italian grid?
This was a key question on the call, and Terna's management responded with pretty strong confidence. They stated that the Italian grid is now much more resilient precisely because of their substantial investments over recent years.
Okay, so the investments are paying off in that sense.
Exactly. Their updated 2025 security plan includes $2 billion allocated for 2025-2028, focusing on what they call a twin transition. That's both the energy transition towards renewables and intensive digitalization of grid operations. They also emphasize that Italy has a robust dispatching framework, which is crucial for managing real-time power flows and preventing large-scale outages. It's a testament to the proactive measures.
And what about the procurement side of these massive projects? I mean, securing the necessary components and expertise for such large-scale infrastructure can be a huge challenge.
It certainly can be. Supply chains have been tricky. But Terna seems well prepared here. They confirm they've already secured nearly all procurement needs through the end of 2025.
Oh, good.
Yeah, and furthermore, about 85% of their substantial 2024-2028 CapEx is already covered by existing contracts. This is a critical point because it significantly mitigates supply chain risks. It means they have visibility and control over their costs and timelines for the vast majority of their planned investments. So what's truly compelling here is how Terna's Q2 performance, coupled with these strategic moves, really solidifies its strategic position. As Italy's regulated grid operator, it's not just a utility, it's a critical enabler of Europe's decarbonization goals. They are positioned right at the heart of the continent's energy transition, really a linchpin in the journey towards net zero.
Yeah, this deep dive really reveals a company confidently executing a massive, multi-year investment plan designed to modernize the grid, integrate significantly more renewables, and the reconfirmation of their full-year guidance, despite, broader macroeconomic uncertainties like inflation and interest rates. That really signals strong management conviction. They believe they can deliver.
Exactly. And while that initial market reaction was muted, maybe implying expectations were largely priced in, the underlying narrative is one of a matured transition. Terna is evolving. It's going from a traditional, maybe somewhat slow-moving regulated utility focused purely on infrastructure build-out to a dynamic, digital, and increasingly cross-border energy infrastructure platform. The focus is shifting towards stabilization of returns, operational excellence, and leveraging technology for efficiency and potentially new growth avenues.
So looking ahead then, what are the key catalysts? What should we and you, the listener, be watching that could truly move the needle for Terna?
There are a few critical areas, I think. Firstly, further regulatory updates to grid fees in Italy that could provide additional clarity and maybe potential upside to their regulated returns. Then, obviously, continued project milestones for the Tyrrhenian and Adriatic interconnectors are vital. Hitting those targets demonstrates execution.
Keeping the projects on track.
Precisely. Continued bookings of high-voltage connections from those data center clients will also be a major indicator of that long-term demand growth we talked about. And finally, the market's receptivity to future green bond tranches. That'll show ongoing investor confidence in their sustainable finance strategy.
Okay. Now for our This Is Not Financial Advice segment, where we pitch an outrageous but plausible trade idea based on today's deep dive.
All right. Given Terna's unique position as a regulated grid operator, right at the epicenter of Europe's energy transition and that undeniable data center boom, I'm thinking about what I'd call the green grid overdrive trade.
Green grid overdrive, I like it. And my idea for this one is a long position in Terna, paired with a short against a, let's say, less agile, dividend-focused traditional European utility that relies heavily on legacy carbon-intensive generation, betting on the future versus the past.
Okay, and the outrageous part of this idea, we're not just betting on incremental, steady growth here. That's the base case. We're betting on a radical re-rating of Terna's valuation multiple. Imagine this. The surge in data center demand continues its parabolic climb.
Which it might.
It really might. Combine that with potentially accelerated, higher incentive regulatory frameworks for critical green infrastructure. This scenario could lead to Terna's regulated returns compounding faster than anyone's currently modeling, surprising even the optimists. It's basically a bet that the market is severely underestimating the scale and speed of the grid's necessary transformation.
And the plausible part that grounds this? Well, Terna's regulated model inherently provides predictable inflation-linked returns. That's a powerful base, very defensive. But its strategic investments, particularly in those critical interconnectors and its deep dive into digitalization, give it a substantial long-term growth kicker. Something the market isn't fully appreciating right now, perhaps. If data center demand truly explodes, Terna's CapEx pipeline could expand even further with favorable regulatory treatment, turning its steady, reliable returns into an unexpected growth story. A prime example of a boring utility becoming a tech-driven infrastructure play. That concludes our deep dive into Terna's Q2 2025 earnings call. We've seen a company with solid financial results, ambitious strategic projects, and a clear, forward-looking vision for its indispensable role in Italy's energy future.
And just a reminder, this deep dive is for informational purposes only. It is definitely not financial advice. The information presented is based on publicly available data, and we strongly encourage you to conduct your own thorough research before making any investment decisions.
Our goal here at the Deep Dive is simply to equip you with clear, concise, and compelling insights to help you stay well-informed in a complex world. Thank you for joining us. We invite you to consider this. As global electricity demand from digitalization and renewable integration escalates, how will critical grid operators like Terna redefine their valuation and strategic importance in the market over the next decade?
Until next time, keep learning and keep digging deeper.